Good morning, everyone. This is Mark Leibovit from the Leibovit VR newsletters, and this is a Tradestation tutorial update for Monday morning, December 1st. Leibovit VR newsletters comprise our silver letter, which is general market commentary, our platinum, which incorporates that plus specific recommendations, our VR gold letter, our annual forecast model coming out once a year, soon to be released in January, and upcoming is our new Vice letter, which is going to cover a whole slew of stocks in the cannabis sector. And don't forget about our Trader's Book of Volume, which is a definitive guide to volume trading released through McGraw-Hill, basically an encyclopedia on volume indicators. Now that the Mark Leibovit volume reversal indicators are available here on TradeStation, I encourage you to sign up for a free trial and seriously consider applying this to your trading. It's a tool that I've used for over 35 years and has been the basis of my success in the markets, calling moves ahead of well, in conjunction with smart money and pretty much in sync with what's happening in individual stocks and sectors because you're following the smart money. Looking at OIL, speaking of where the action is, this has been a big negative picture in the crude oil market, pretty much confirmed. And here what we're looking at is the Leibovit VR sequential indicator. As I mentioned in my introductory video, which hopefully you've taken a look at, there's three versions of the indicator on TradeStation. The first, again, is the sequential, where we count all the negative VRs and we show all the VRs, positive and negative. And as you can see here at OIL, which is the ETN for crude oil, we've had multiple negative VRs, and if you took these as two-day trades, which I generally do, or played them for more of an intermediate move, you've been successful. But even more recently, just last Tuesday, we generated a Leibovit negative VR here. And look what happened. You had a quiet day on Friday, excuse me, on Wednesday, and then with the holiday Thursday, and Friday, of course, you had the big decline. And of course, from that point of view, I tend to look to trade out of it and take a trade. Anytime I get a big move, gap move after a positive or negative VR, you know, this is a gift, and even though it may be higher or lower this morning is irrelevant, but if it is lower, you know, it's still vindicated the indicator. Now, what we like to do is tie in the 533 stochastic, which you see here that I'm circling. As a general rule, if the faster stochastic is breaking through the slower one, that is the 533, I tend to take the trade. I use this as sort of a little bit of a confirming indicator, and nothing's 100%, but you could put any momentum indicator you would like up there. And on the screen, what else do we have? We have our 50-day moving average and our 200-day, just as a general guide. But for me, the VR in conjunction with the stochastic is pretty much all I need to indicate a trade. Let's look at the weekly chart just to give you perspective here. Several Leibovit negative VRs here, counting 3, 4, 5, you know, in recent months, indicating the downtrend, and it's clear that they were providing great warning. But you know, then again, you can get a positive, like way back here on March 28th, the week of March 28th, we generated a positive Leibovit VR, and then we see the stochastic starting to turn up. We had several weeks of a little rally before negative came in. So you know, we're tying in intermediate moves. I tend to play more of the daily chart, which I think I've described to you in my previous recording, but the weekly does have its validity. And that's pretty much it. We can look at other names in the oil sector, oil service sector. They all pretty much show the same pattern. So what am I looking to do now? Well, if we could see volume slow to the downside in trading today or Tuesday, and if we could generate a positive VR and hopefully an uptrending stochastic, there's going to be a trade here on the long side. Target would be to fill this gap. So in the OIL, that would be around 1783. And let's see if that unfolds. If not, we'll just pass on it. But at least you caught the short side here for a nice break based on the most current Leibovit VR. Have a pleasant day, and we look forward to catching you on our next update here at TradeStation and the Leibovit VR indicator. Thank you.